Once again, good evening and welcome to the PhD class in financial reporting standard. That's what we'll be looking at for this semester. While
Yeah,
others are still joining, it's already 5 p.m. as per our Zoom details. And here in the US, I say it's 11 a.m. If you look at your course outline, which I'm still going to share
duka
in
tamkin
case
ka bani
some of you don't have it, we're going to just take an
duka tamkin
overview
libon
of the very first topic we have for today. That's Module 1 from
diban
everybody. So, which is Module 1 from our course outline. I'm sharing it as I'm saying it. I'm sharing that. Review financial reporting. So, if you look at this course outline, let's quickly do a quick overview. Module 1 is saying is Introduction to Financial Reporting Standards, and under that particular main heading, we have historical development and convergence efforts of IFRS and IPSAS, overview of conceptual frameworks and standard setting bodies, role and importance of financial reporting standards in accounting research. Then Module 2, look at financial statement analysis and disclosures. And under this Module 2, we look at preparation and analysis of financial statements prepared under IFRS and IPSAS. By way of reminder, we know IFRS is International Financial Reporting Standard. Before now, they call it IAS, International Accounting Standard. And we know IPSAS is International Public Sector Accounting Standard. We're going to see those in details. Then still under Module 2, we'll look at understanding the importance of transparent and informative disclosures. Then we look at comparative analysis of financial reporting practices across different industries and sectors. Then we have the Module 3, sustainability reporting. Sustainability reporting is one of the things, one of the main focus now that is in vogue globally today. Then Module 4 will look at application of digital tools in financial reporting. Module 5 will look at IFRS framework and key standards. Here we just look at some key IFRS standards. So there we'll see overview of the IFRS framework and its objectives, recognition, measurement, and presentation of financial statement elements, analysis of key IFRS standards, including revenue recognition. So here we're gonna select some key IFRS standards. Then we see their recognition, measurement, and presentation. Module 6 is IPSAS framework and key standards. IPSAS. Just as we have seen for IFRS, IPSAS that is addressing public sector entity will look at introduction to IPSAS and its applicability in public sector, analysis of key IPSAS standards, including revenue recognition and measurement. Then Module 7, challenges and emerging issues in financial reporting standards. Of course, here we'll look at critical evaluation of the implementation challenges faced by organizations, exploration of emerging issues in financial reporting, such as sustainability reporting and digital financial reporting. Then analysis of recent development and future trends in IFRS and IPSAS. I think this is the last one. Finally, we look at research methods in financial reporting standard. Among others, what we'll be looking at research methods, some of you may want to pick your research topic or you want to write your PhD thesis in the area of financial reporting standard. These are part of the things we'll look at here. We'll look at introduction to research methodologies applicable to financial reporting standard. This is the area we'll come up with different topics that are researchable as it affects financial reporting standard, which I'm going to peer you in the class, 2 to 1 topic, and I will ask you to do a paper, at least an article. That may be your continuous assessment or form part of your CA. You will come up with articles that are publishable. Don't go and do or don't go and copy somebody's work that has already been published. So that is what we do. If you look at all these 8 topics, but I can assure you, if we have 4, 5 contacts, we should be able to cover this. Because all I need to do at this level, at the PhD level, is not where we spoon feed you. For someone to come for PhD, we want to believe you have done BSc accounting. And I know if your BSc accounting was not gotten over 15 years ago, 10, 15 years ago, you already know what is IFRS and IFRS undergraduate level. Then you have your MSc. So at PhD level, mine is to just draw your attention. These are the areas, these are the items germane to the topic. Then, of course, I will share with us some of the notes I put together thereafter as before your exam or before the next contact, and you do further research. That is PhD. PhD is basically research. Now I will highlight what I have here and I will be explaining them one after the other. If you can see my screen, what we are discussing today. Okay. Okay, let me just highlight the entire. See, so I will just pick them one after the other, and you can be jotting your points if you want to jot anything. Because the historical development, are we there? If you want to talk, you can mute. Anyway, I want to believe maybe some of the students in the class we have met before, but to me, we'll be doing introduction much, much later. I tell my student the most important thing is for you to understand the course, the subject matter. Not, it's not the time for you to know the lecturer. If you know my course and you understand what I'm teaching you, I'm satisfied. Rather than me coming to tell you, my name is Adebayo Paul Adejola. No, mm, let's hit the ground running. Ladies and gentlemen, so as you can see on your screen, we'll be looking at module 1 today. Introduction, we start with introduction. Let me give you a general overview first. Introduction to financial reporting standards. Now, if someone asks you, how do you define financial reporting standard? I put it this way. They are set of global standards, global standard expected of preparers of financial statement to adopt or utilize while preparing financial reports. Ladies and gentlemen, you can see at a point in time we come to convergence. Before now, they call it International Accounting Standard. That is for IFRS. I ask people a question that why will an accountant in Nigeria, chartered accountant or certified accountant, and sometimes with even a PhD in accounting and finance, why is it that that person cannot practice when he finds himself outside the shores of Nigeria? One of the reasons, let me tell you, is this. Like in the United States now, IFRS has not been fully adopted or has not been adopted. They still use GAAP. So different countries, especially those who have not adopted IFRS, have their own accounting principles, they have their rules, they have their regulations. And when we even talk about accounting policies, they differ. They differ from company to company, organization to organization. Now, in order to give clarity to financial reports, in order to give uniformity to financial statement, so that an accountant in Nigeria or an accountant in United States can be an accountant anywhere. We now start talking of financial reporting standard. At least, as discovered by the Italian priest Luca Pacioli, who founded the double entry principle, debit and credit is the same globally. So if debit and credit is the same globally, it follows that we should be able to come up with some rules, with some regulations, with some standards that we apply in preparing financial report from set of transactions. So that when I give you a transaction now, or I give you a set of transactions in the US, and I ask you to prepare final accounts, and I give another person the same set of transactions in United Kingdom, and I say prepare final accounts, we should be able to come up with at least the same thing, other than maybe forex exchange and some other variation in policies. So we say financial reporting standards are the backbone of modern financial accounting and corporate transparency. The backbone of modern financial accounting and corporate transparency. It provides the rules, principles, and conceptual guidelines. I said that earlier. They provide what? The rules, the principles, and conceptual guidelines governing the preparation and presentation of financial statement. That is financial reporting standard. Now, I will also state here that in an increasingly globalized economy, financial reporting standards serve three key purposes. Listen to this now. They serve three keyword purposes. One is to enhance comparability. I've explained this earlier. Comparability. So that when I prepare financial reports in the US and they take the same financial report to Australia, you should be able to compare that is the same. I will give another practical example. If there is a company, let's say ACCSA Global, United States, and we have ACCSA Global in Australia, and we also have ACCSA Global in United Kingdom, and this organization prepare their financial reporting or financial statements. We want to compare all the three. Since debit and credit is debit and credit globally, it follows that the ACCSA Global in the US, the ACCSA Global in Australia, the ACCSA Global in United Kingdom should have some element of comparability in the financial statement they have prepared. Number two, we are saying improving transparency and accountability for stakeholders. Here we are discussing what? That financial reporting standards serve three key purposes. Why are we talking about financial reporting standard? Why won't we allow us to continue to use our statement of accounting standard, SAS? You know, that's what we were using before in Nigeria. Why won't we say US should continue with their GAAP, generally accepted accounting principle? I'm giving the first reason, enhancing comparability across countries and industries. Number two, I said improving transparency and what? Accountability. Including what? Transparency and accountability for
Accountability.
stakeholders. Number three, we are saying again, supporting economic decision making by investors. I'm just explaining, it's an overview we are taking. Yeah, when we talk of accountability and transparency, I will want one of you to unmute there. I want this class to be interactive actually. Can somebody help us differentiate between accountability and transparency? Can somebody differentiate the two? Or are we saying accountability is the same thing as transparency? Anybody want to give it a try?
Yeah.
unmute your name, then make an attempt. Nobody
Hello.
want to try.
Hello.
Go
Hello. Good
ahead.
morning, Prof, to you over there, and good evening to us here.
All right.
Okay,
Go ahead.
I'm coming. I'll come and look at it.
Go ahead. All right. Maybe network issues there. Any other person? I'm seeing Johnson T. Erin Folami. Unmute
Hello.
yourself. Make
Okay, yeah, good evening, sir.
Good evening, sir. Go ahead.
Yeah, this is Johnson Nicolami. Transparency is talking about open disclosure of information, aiming to have clarity of information. Why accountability is talking about the responsibility to explain and justify the consequence of an action or a certain decision.
Are you explaining it in terms of the real meaning, that's the normal meaning, or you in terms of financial reporting now? Because when you say
Okay, yeah,
accountability is to
in
justify our
terms
action,
of okay,
relate
let me
your
bring it this way
explanation to
to
financial reports.
accounting reporting.
Yes,
Yeah, in the transparency aspect, we are having open disclosure of information so that
correct.
so that users will be able to understand the financial information. Then when we're talking about the accountability, that's the ability to explain and justify having a reason behind the financial information. That's talking about the clarity.
Clarity. So, by implication, if we put it this way, it is possible for us to have all information or we have financial statement prepared as at when due, but we are not disclosing the reality of the transactions. You know that? Transparency, like he did mention, I'm sure every one of us had this explanation, is for you to disclose everything that need to be disclosed. And it's one of the reasons the people who are against the IFRS or financial reporting standard generally, they say information overload. You know, under our old SAS, Statement of Accounting Standards, they will tell you a breach financial statement. That's the people at the top there, the stakeholders, don't have time to go through lengthy transactions. So summarize. But in financial reporting stand to be specific now, IFRS and IPSAS, I've seen some financial report of multinational companies before that the main financial statement as prescribed by IAS 1, that statement of comprehensive income. We have the statement of financial position. We have statement of changes in equity. We have statement of cash flow. Then we have the notes to the account. When you look at all these statements, they may not be more than 10 to 12 pages. When you see the notes to the account, some can be up to 100 pages because of transparency. They want you to disclose. Peradventure, the company is even saying we have some transaction during the year under review that cannot be quantified in naira or dollars or pounds ten. They're saying disclose it as notes to the account. That is transparency. You are not leaving anything behind. But when we say accountability, that is, you've taken a responsibility to prepare your financial statement as at when due. You are doing what is expected of you. But do you know that again? Okay, this analogy or analysis will explain whether doing a good thing is different from doing the right thing. In accountability, you can say, okay, I'm explaining my action, I'm responsible to prepare the financial report as at when due. That is a good thing. But the next question will now be, am I really reporting the figures the way they are supposed to be reported or the way they are? That is transparency. There was a question I've asked in the time past. I don't know if I'm going to ask you that the International Financial Reporting Standard and International Public Sector Accounting Standard, among others, are having the following objectives: accountability, transparency, and comparability. Sequel to the foregoing, it follows that with the implementation of financial reporting standard, fraud, irregularities has been taken care of or can be taken care of. Discuss. That is, with the adoption of IFRS and IFRS, fraud and irregularities has been taken care of perfectly. I'm not expecting you to respond to that question. It's just food for thought. Your takeaway, food for thought. Ladies and gentlemen, so that we maintain focus, what we have discussed so far is just to look at the purpose or objective of the adoption of financial reporting standard. And the next thing we'll discuss is who such standards. I've mentioned them earlier. We have the International Financial Reporting Standard, which is relevant to the private sector and government business enterprises, GBEs. By implication, if we have organizations owned by government, the government have given them the autonomy or the authority go and make profit instead of expecting allocation from us. Government is the one even expecting expecting revenue returns from such organization. In that case, those organizations, though owned by government, they are classified as GBEs, government business enterprises. And the correct reporting standard for such government-owned enterprises is IFRS. But when we talk of IPSAS, International Public Sector Accounting Standards, they are the one used in government and public sector organization, what we call PSEs, public sector entities. And as far as we are concerned in our country, Nigeria, we have IPSAS ACRA relevant to the 36 states, including the FCTA and the 774 local government. It's not just applicable to them, it's applicable to all the ministries, departments, agencies, for the federal government, for the 36 states, and for the 774 local government. That is IPSAS. Now, when we say the study of financial reporting standard at this level, why are we studying this at the PhD level? Here we're going to focus on the application, that's in the PhD class, theoretical foundations like what we are seeing, the institutional development, policy implementation, and research opportunities. That's one of the reasons we're looking at financial reporting standard at this level. Now, early development of accounting standards. Ladies and gentlemen, I'll just give us a brief overview. Then you can go and do some other findings. Before the development of formal accounting standard, financial reporting practices vary significantly across organizations. Some of these things have just, my general overview has even taken care of all this. There are different practices, like in Nigeria, we use SAS, Statement of Accounting Standards. In US, they still use GAAP. In some other country, is Financial Standard Board. We're going to come to that later. Accounting methods were largely based on professional judgment and local practices in some countries. But we have some challenges: lack of comparability, limited transparency, high risk of financial manipulation, inconsistent measurement and disclosure methods. I'm sure we have heard of uniform accounting before. Uniform accounting. They talk of uniform accounting because of different accounting practices across geographical location and among different industries. Now, something happened in 1930. That's in 1930s, we have the Great Depressions, and these Great Depressions triggered a global push for stronger financial reporting regulation. We remember the Great Depression of 1930s. As a result of this depression, people start calling for more strong reporting regulation. Now, or stronger. Let's go back home. How many of us also is aware that some few years back, our former Minister of Finance, who was asked to resign, is it Kemi? I can't remember her name now, who was asked to resign. There was a time she came up with a request that we have allocations for all the state governments in Nigeria. And she now put a clause. She said, only states who have met all the requirements of financial reporting standard, that's IFRS Accra, will be entitled to such allocation. Number two, there was another time, again in Nigeria, we had some foreign investors ready with their millions of dollars, millions of pounds, and billions of dollars and billions of pounds. And they gave a condition that they've observed that our reporting system is porous, is not effective. Our internal control system is also weak and ineffective. And they gave a condition that until Nigeria fully adopts the IFRS and IPSAS, they are not ready to come and invest. They are huge investment in Nigeria. If I want to provide answer to one of the questions I asked earlier, or to the question I asked earlier, see, no matter the sophistication of any reporting standard or accounting system we put in place in our country or countries in general, as long as human being will still be involved in keying the data, forget it. So if we want to build a system, listen to this, very, very important. If we want to build a system or we want to fix a system, the correct thing to do first is to fix the human being that will handle the system. Because the human being you refuse to fix or you refuse to build will be the one that will destroy the system you want to put in place. So no matter the sophistication or the attractiveness of the reporting standard or even our accounting system, once there is something wrong with the professionals that will be saddled with the responsibility of maintaining this record, maintaining this report, or preparing this report, there is a big problem. And you know that major problem that we have, not only in Nigeria. I don't like peculiarizing our problem in Nigeria. It's everywhere. Corruption. It's just that corruption is in level. Just as men are in sizes, life is in phases, men in sizes. Corruption has eaten deep into the bones and marrows of the average human being. I'm not saying Nigeria now, but let's leave that one for another day. When we fell the end of this class, we even look at a topic on the impact of financial reporting standard on corruption. Impact of financial reporting standard on corruption in Nigeria, specific reference. Because somebody will ask, we have all the IFRS in place, we have all the IPSAS. Yet, it's very crazy when you hear the kind of money some people are symphonia in Nigeria. It's really crazy. You wonder what some people will do with that kind of money. Is it that the financial reporting standard is irrelevant, is useless, or what? We are going to see a question where a chief executive of an organization said concerning financial statement, said we made profit for 3 years, yet we cannot make ends meet. It's just like reporting profit in billions, yet you cannot settle a debt of tens of millions. How do you explain this situation? And that chief executive concluded that accounting profit are paper profits. They are misleading and they don't represent a true and fair view, as we claim, as the auditor will say. Now, without wasting time, again, I will go back. We talk of Great Depression. We're just looking at the historical background now. Say Great Depression of the 1930s triggered a global push for stronger financial reporting regulation. And the key development there included creation of regulatory authorities, then formation of accounting standard setting bodies, development of uniform reporting framework. Today, if you talk of IFRS, what is the regulatory authority responsible for publishing this IFRS? They are International Accounting Standard Board. But before the International Accounting Standard Board started or took over, we have what is called International Accounting Standards Committee of 1973. International Accounting Standard Committee established in 1973 by professional accounting bodies from United States, United Kingdom, Canada, Australia, Germany, France, Japan, Netherlands, Mexico, to mention but a few. Then in 2001, we now have the phase 2, which is creation of IASB. So ladies and gentlemen, I know we know this thing, maybe our MSc or BSc, that the body now that is responsible for the issuance of IFRS is the International Accounting Standard Board. It was created in 2001, it's stage by stage. And the major reforms they carried out include stronger governance structure, the improved standard setting procedures, focus on high quality global standards. Then, ladies and gentlemen, we have the phase 3. You know, I started with International Accounting Standard Setting Committee. Are we there? International Accounting Standards Committee, IASC Standards Committee. And I said it was established in 1973. Then we have the IASB created in 2001. Then phase 3, we are talking of the historical development now. We have the global adoption and expansion. Here in 2005, we have the European Union mandated IFRS for listed companies. In 2010 onwards, countries across Africa, Asia, and Latin America adopted IFRS. In 2012, Nigeria adopted IFRS for listed companies, public interest entities, and small and medium enterprises. That is the historical development of IFRS. It starts with IASC, I'm repeating now, followed by IASB. Then the phase 3 is the global adoption. And we say for Nigeria, we started the adoption in 2012. Now let's quickly look at development of IFRS. IFRS is International Public Sector Accounting Standard. Now before the adoption of IFRS, you know, the cash-based accounting system, cash basis, cash and carry, that you don't recognize until cash is involved. But in actual accounting, we are saying whether cash has been paid or not, you should recognize it. That's the actual and matching concept. So public sector accounting historically relied on cash-based accounting systems. We've done that before in our public sector accounting. However, increasing demands for transparency, accountability, comparability, and fiscal sustainability now led to the development of modern public sector standard. We are not rushing. I want to explain clearly. Before now, in the public sector is cash-based accounting system. But then they started requesting, the stakeholders start demanding for transparency, accountability, sustainability, and comparability. And that's why today they call IFRS the mother of IFRS. So it was IFRS that actually now gave birth to IFRS. If we have taken IFRS and we say the adoption of IFRS will lead to accountability or will bring about accountability, transparency, and comparability. And now in the public sector, people are also demanding for the same. We want accountability. We want transparency. We want fiscal sustainability in the public sector. So what they just did, they now review some of the IFRS standard and we repackage it and we call it International Public Sector Accounting Standards. Ladies and gentlemen, the International Public Sector Accounting Standard Board is the body or the authority saddled with the responsibility of publishing IPSAS ACRA. And it was created by the International Federation of Accountants, IFAC. Are we there? So IPSAS focus mainly on accountability in government, financial reporting, public sector, resource management, fiscal transparency. That is the historical overview of IPSAS and IFRS so far. Now, we quickly take another subheading. Today is just general overview. By next contact, we go into the real financial reporting because there are some computations, of course, calculation and preparation of report we are going to do. We want to look at convergence effort between IFRS and IPSAS. Ladies and gentlemen, if they ask us again, what do we mean by convergence? When they say convergence. Without wasting our time, it is the process of harmonizing accounting standards globally to improve comparability and consistency. Let me take that again. When we say convergence here, we are saying the process of harmonizing accounting standards globally to improve comparability and consistency. You know, even in our accounting concept and convention, we have the consistency convention, consistency. That is, if you have chosen to use straight line method of depreciation, let it be uniform, let it be the same. Use it for a reasonable period of time before you change. Convergence involves aligning accounting principles, reducing differences between national standards, adopting international frameworks. So when we talk of convergence, let me give it a practical illustration or practical coloration. Now in the US, I say we still use GAAP here, generally accepted accounting principle. In Nigeria, we use IFRS. Peradventure, we have other country who use statement of accounting standard. All we are doing in convergence is let us come together. Let us harmonize all these different accounting standards and call it a global accounting standard that will enable uniformity in the way we prepare our financial report. That is convergence. But for IFRS Convergence Initiative, we have the major convergence initiative, which include the US GAAP convergence, which I just explained now, US convergence. Now, when I say US convergence, it's not that US have fully adopted, they have not. What they are saying is, okay, we are picking some areas of IFRS that are germane, very, very, or that similar to what we have in GAAP. But we are still maintaining our GAAP. So there are some key projects. We are going to look at them later. I've mentioned revenue recognition. We are going to see the similarity between IFRS and the way GAAP treats revenue recognition. It is interesting to note that we have countries who have adopted IFRS for different reasons. I've mentioned, like Nigeria, we are giving a condition that in order to attract foreign investment, so you must adopt the IFRS or IPSAS. They're improving financial transparency, facilitating cross-border financing, and so on. Going by our course outline, we look at overview of conceptual framework, standard setting bodies. That's the next thing we see. And the standard setting bodies I've mentioned for IFRS is what? International Accounting Standard Board. And for IPSAS, it is International Public Sector Accounting Board. International Public Sector Accounting Standards Board. We look at role and importance of financial reporting standard in accounting research. Before we discuss this, ladies and gentlemen, questions, comments, so far so good. If you don't have a question, if I ask you this question, please check. We'll make it interactive. If I ask you a question to highlight the characteristics of, are we there? If I ask us to highlight the qualitative characteristics of financial statements, what can we say? Or better still, I have two questions for us. Number one, qualitative characteristics of financial statements. Then number two, elements of financial statements. Elements. Anybody? Don't make it one-way lecture. Let's make it interactive. Qualitative characteristics of financial statements, or if I want to make it easier, see in my hand here. Right? All right. I have in my hand here a report, maybe financial reports. And I'm asking the question, what are the qualitative characteristics expected of a good report or good information? Because anything you have on paper, when you call it financial report, is to inform you. So what are the characteristics? Anyone trying?
Yes, please.
Go ahead. Your name?
What's the Stanley Maker, sir?
All right, go ahead.
The element, when we have what we call timeless,
Perfect.
understandability,
Thank you. You are there.
comparability, sir,
Comparability.
and verifiability.
That is it.
Thank you, sir.
All right. So when we say elements of financial statements, okay. Somebody raising his hand. Go ahead.
Yes, my name is Leko. The elements of financial statement are the income, balance sheet, assets, liabilities, equity.
All right. The best way for you to identify the elements of is another way to say component of financial statement. The first thing is for you to identify the financial statement. Majorly is income and expenditure account or statement of comprehensive income, IFRS. If it is IPSAS, they call it statement of financial performance. Then we have the balance sheet or statement of financial position. So what make up our balance sheet? There is the accounting equation which says asset must be equal to capital plus liabilities. So the embodiment, when they now say the elements of financial statement, if you pick balance sheet, assets, capital, and liabilities, that's okay for financial statement. But when you go to define income statements, what make up our income statement is just income and expenses. That's the current expenditure. I hope that is clear. All right. The last we are going to see from our course outline, role and importance of financial reporting standards in accounting research. Role and importance And once we see that, we call it a day for now. It's just to introduce and lay foundation. All right. So the role of financial reporting standards in accounting research. So financial reporting standards play a very critical role in accounting scholarship, especially for PhD students. Doctoral research often focuses on standard effectiveness, market consequences, implementation challenges, policy implication. Now let's pay attention. We say role of accounting research. Are we taking that again? Role of financial reporting standards in accounting research. Let me leave this question open for everybody. What role do you think this course will play? Because every PhD is research-based. We even have some university that they will waive the coursework, no coursework. Just go and do your research and they will give you your PhD. I'm just breaking down this question now, and I want us to really have a mental picture of what we are talking about. So it's not necessary or it's not a must. Sometimes you give exactly the point I give when you have a good understanding of the subject we are discussing. So if we say PhD is research-based, and we are now talking about financial reporting standards. So what role do you think financial reporting standard will play in accounting research? Anybody?
Okay.
Now, if we first talk of research opportunities in IFRS, the key areas we're going to look at is one, IFRS adoption effects. That's the effect. You know, earlier on I told us effect of IFRS adoption on corruption. Is it affecting corruption positively or negatively? The earnings quality under IFRS, value relevance of accounting information, IFRS and capital market development. Then when we talk of IPSAS research opportunities in IPSAS, we are talking about transparency in government accounting, fiscal accountability, public sector financial management reforms. So I still go back to my question. What role then will financial reporting standards play in accounting research? Any volunteer? Anybody contributing to that? Nobody?
Come again, sir.
The role of financial reporting standards in accounting research. What role will it play?
Can I try?
Go ahead.
Okay, my name is Benedict Owushe. Number one, it guides on data collection and analysis. And it also promotes consistency in financial analysis. And
In
one can
financial
also say that,
analysis.
yes, sir. And it also supports regulatory oversight.
Take that last one again.
I say it also supports regulatory oversight. Regulatory oversight.
Regulatory oversight. So in addition to that, we have policy evaluation. It helps in policy evaluation, earnings quality, and it helps in harmonizing research. If you look at what I mentioned earlier, if you want to approach this question, peradventure, I ask the same question maybe in exam, that the role of financial reporting and accounting research. What I will expect you to do
Where is
first
that woman that?
is to first identify some important areas of accounting research when it comes to IFRS, then research areas in IPSAS. Then how will financial reporting standard help you in these following in the identified research areas? That is the approach you should give to it. All right. And I did mention earlier, I said doctoral research often focus on standard effectiveness, market consequences, policy implementation. Then we mentioned that common research areas for IFRS include IFRS adoption. Please mute yourself. IFRS adoption effect, earnings quality under IFRS, value relevance of accounting information, the IFRS and capital market development. So these are some common research areas when we talk of international financial reporting standard. Remember the question again, or that subtopic 3, our module 1, role of financial reporting standard in accounting research. So I'm telling you to approach this question, first identify the accounting research areas. That's common research areas for IFRS and common research areas for IPSAS. Once you identify those areas, you will now be able to say, okay, IFRS will help in the area of effect. Somebody may want to carry out a research. I want to see the effect of IFRS adoption on corruption. You know, I've mentioned this, I keep saying this now. Is IFRS adoption actually affecting corruption? When I say affecting corruption now, is it curbing corruption? Because if we have agreed that 3 key major objectives of adoption of IFRS include what? Accountability, transparency, and comparability. So it should follow, it's just logical that if IFRS achieve these 3 key objectives, corruption should reduce or completely be eliminated. So somebody may want to carry out a research and say, I want to look at the effect of IFRS adoption on corruption or on performance. That is one area. Now, another area you can research when you talk of IFRS, earnings quality, earnings. Before the adoption of IFRS, people, organizations, companies are making money. They are making profit. We now want to see whether the adoption of IFRS is making the organization to earn better income. So I've seen research area, some people want to see earnings pre-adoption of IFRS, earnings post-adoption of IFRS. These are areas of accounting research. I did mention another one, say value relevance of accounting information, value relevance. Like I gave us example again, that chief executive who concluded that accounting information accounting profit are paper profits. They are misleading. They don't represent a true and fair view. A researcher, one of you may decide that, okay, I want to carry out research to find out whether IFRS adoption is actually affecting the value relevance of accounting information. Maybe under our whole SAS, you have all reasonable fact to support that corruption was more when we are using statement of accounting standard. You now want to compare corruption while we are using statement of accounting standard. You want to compare it with corruption when we are now using IFRS. So these are area. Then another research area when we talk of IFRS is IFRS and capital market development. How is IFRS adoption affecting the capital market? And by the time you identify these key areas, you're already talking of the role of financial reporting standards in accounting research. Then when you look at IPSAS, what are the key areas you can carry out research? IPSAS Accra, transparency in government accounting. Do we have, I'm sure, if not all the ministry, departments, and agencies of the 36 states and the 774 local government in Nigeria were adopted. Majority have adopted IFSAS Accra. There is the adoption of IFSAS Accra. Has the adoption of IFSAS Accra stop corruption? It's like the more we even adopted the IFSAS Accra, the more the corruption. And that's why I say the issue of corruption in our country is not all about IFSAS Accra. It's all about the human being. We are stopping here for today. Time for questions, comments.
Hello, sir.
Go ahead.
Hello. My name is Sulaiman Ladan Kambari from Nassau State University here.
Right?
Hello, can you hear me?
Loud and clear.
Hello, sir, can you hear me?
Loud and clear.
How? Okay, I see. Now, the IFSA, what can we differentiate between the ISA and what is the importance of IFSA to current accounting system?
Take that again. How do we
I
differentiate?
say, what is the importance of IFSA? The most important of IFSA to current accounting system in our various organizations.
That is IPSAS now is for public sector, international public sector accounting standard. Ladies and gentlemen, let me do I think one statement or two statements will answer your question. IPSAS actual adoption by ministries, departments, and agencies for the 36 states in Nigeria and the FCTA and the 774 local governments will only make impact if and only if they are adopted fully, correctly, and without manipulation of the figures or data. Now, let me take that again or explain in a better way. We started by saying the three key objectives of the adoption of IFSAS or IFRS is accountability, transparency, and comparability. So if all our ministries, departments, and agencies will follow all the prescriptions, all the principles, all the disclosure requirements laid down in IPSAS Accra or IFRS, then we can say it is very, very important and relevant in our various organizations. But where there is room for manipulation, falsification of records, or falsification of data, which is mostly as a result of management incompetence, poor internal control system, then the adoption of IFSAS or IFR is another waste of resources. You know, when we talk of internal control system, I will conclude with this. They will tell you internal control is the whole system of controls established by management in order to carry on the business activities of the organization in an orderly and effective manner, safeguard the assets, ensure adherence to management policies, and to secure as far as possible the completeness and accuracy of the record. The individual components of this internal control are called controls, where you have, I think there's an acronym they use, Papa Musa, as the elements of internal control. But where, for example, your ministry or department or agency have adopted IFSAS Accra, and only one staff or one professional is responsible to key in data, no supervision, or there's no any other control measure put in place to confirm whether it's keying in the right data. The same professional is the custodian of the source documents. There's problem. Before I joined National State University in 2003, 2003, before I joined National State University. I've worked in UBA. After UBA, I was in Nigerian Law School as an accountant. It was from Nigerian Law School.
Okay.
I came to National State University. And in Nigerian Law School, I saw for the first time one-man budget committee. This guy is the revenue officer. He will be the one, in short, he's the custodian of the checkbooks, he's the custodian of the cash book, he's the one who oversees the revenue unit, he's the one who go to lodge, then they collect cash in Nigerian Law School Buhari. He's the one who go to lodge the cash collected in the bank. He's the custodian of the bank statement. So how do we expect transparency in this situation? So the same thing, even with the adoption of IPSAS, ACRA, or IFRS, if there is no segregation of duties, if there is no supervision, if there is no authorization, there is problem. And above all, if we don't have institutions who will punish offenders, then corruption continue. Any other question or comment? I can see Muhammad Awode, your hand. Unmute yourself.
Prof, thank you so much for your contribution. Good evening, colleagues. Prof, I want to go straight to this issue of IPSA's application and implementation. The major effect, I can say, is the political will. I work in an organization who we see as one of the pilot agencies that anytime government want to bring in reforms, especially the financial ones, when you talk about with the Accountant General Office, CBN, and those other places, we're always at the forefront. But at the end of the day, you will see that our zeal is being weakened by even the way government does their business and also look at things themselves from their angle. This issue of lack of segregation of duties, I think it has been reduced to a very bearable minimum. In some places, it's well done. That segregation is done because if you talk about payment for projects carried out for the government, you see that we have GIVMIS, we have IPPIS. One person cannot do that. But just like you said, all these things we've been complaining of, corruption, mismanagement, they are still, going on, and even at the higher effect or rate compared to the way we know it before. This has even become a professional one. So if we really want to, how do you call it, to do away with that, government itself, its body language has to show that, yes, they're actually ready to fight corruption or do away with that. And also see how they can influence the mindset of individuals at all levels. I'm a community person. Even at the most local areas that you think some people are not open to some of those opportunities for manipulations, Prof, you'll be surprised that a lot of things are happening. You know what we call pure water, those sachet water we sell.
Yeah.
Send a little boy to go and buy that for you, give him money. If they are selling it 300 per bag, give him 500. By the time he comes back, he doesn't want to even give you the change. Or he would want to see how he can even manipulate to see how he can get something out of that. But in olden days or before, we do it with pleasure. As kids, yeah.
All right. Thank you for that contribution. If you were here when we started this lecture, I think one of the statements I've made at the commencement of today's lecture is this. I will make that statement again. No matter the sophistication of the reporting standards and are we there? No matter the sophistication of the reporting standard put in place and the accounting system put in place, as long as something is wrong with the human being, it's a waste of resources. I made that statement. So when I say it's a waste of resources, or I say something wrong with human being, I'm not referring only to the person handling the accounting system. I'm generalizing now. It's from the top. Corruption. If the person at the top is corrupt, some people will say, do as I say, not as I do. But it should be leadership by example. So we really have a lot of work to do. This reorientation, you said, our value system has been eroded. Everybody coming in there, the very first thing is how you can amass wealth and form money. And how do you even explain that somebody who is looking for a position of responsibility, want to occupy an office, and they are asking him to go and bring money? So what do we expect? That's really, I don't want us to open the subject of corruption today. The IPSAs themselves, the IFRS, all these reporting standards on their own, they are excellent, very good. It's the implementation that is the problem, or the people implementing. It's human being. God will help us. All right, Tom. Let's stop here. I have another meeting. Enjoy your evening. See us next week by God's grace. All right, now. Is the class governor here?
Yes, I'm here, Prof.
All right, what we are going to do, I will encourage the next meeting, everybody will join using their names. We'll be taking attendance. Huh? Can do
That's
the
fine, Prof.
attendance from here.
Okay,
Yes.
sir.
All right. Have a
Thank
wonderful
you,
evening.
sir.
Thank you,
Bye.
sir.
Thank you, sir.
Bye.
Thank
Thank
you,
you,
sir.
sir.
Thank you, sir.